take a look at next request US dollar from our own Dave Williams down in Haiti. The dollar, I was talking with my trading partner this morning, John, and he disagrees with me about the dollar. My gut feeling is that it's going to go up forever, that there is no target. I think the dollar, it's not in a short squeeze because the dollar rally, as steep as it's been, is not quite, it's not as out of control nutso as a short squeeze. And of course, good thing too, because when the dollar is in a true short squeeze, when essentially, for one, all borrowers of dollars in debt that rolls over every 18 hours, very short-term debt, they're not going to be able to roll over. Their lenders are going to insist that they settle in cash, and that's going to put a squeeze on the dollar. But right now, we just have a rally, of a squeeze of a different sort. I use the term squeeze because the dollar is going up, and everybody's starting to get nervous about it, most particularly the Fed, even though acknowledging that is never going to be part of their management of our expectations. But everybody's a little nervous about it because even though before the dollar started really getting strong, nobody, I'm talking about looking at the whole world, the population of however many billions of people there are, nobody really thought about what would happen if the dollar got really strong. But what we're seeing, today's Wall Street Journal story, is that the stronger dollar is going to force some multinational U.S. banks to have to put more in reserve. But we've seen some of the other results with Q4 earnings. All the American multinationals took a huge hit on foreign earnings. And of course, that it may not have made a crucial difference with Apple. Apple made so much money that even with the currency hit, they were still able to report a great quarter. Caterpillar, not so much. Caterpillar has exposure globally to what we would call real economy events. It's not the financial BS. It's Caterpillar operates in the real world of heavy machinery, and the currency hit against Caterpillar was one that brought intimations of despair from their top brass. Caterpillar's basically saying, we don't know how we're going to survive if the dollar, well, they'll survive, but we don't know how we're going to prosper if the dollar continues to get strong. So when I describe the dollar strength as a squeeze, it's not so much that the real squeeze has begun, but more a matter of the dollar's going up and people are shaking their heads and thinking there's nothing we can do about this. And that's the simple truth of it. If you've got money that you want to park somewhere, you certainly don't want to park it in Europe or China for that matter. Nobody really parks money in China except the Chinese. But so the dollar is strengthening, and it's starting to create a little bit of nervousness, and just the fact of nervousness and danger is not exactly that's not going to bring the dollar down. So the dollar is in a prelude to going bullishly out of control, and I don't think we have to go any further. We'll take a look at the longer term chart here, but just to get the lay of the land for now, let's see if I can get TradeStation to behave. You can see it's just sort of stumbling around at a midpoint resistance, and once it pops through, we're going to see a rally to 96.27, which in percentage terms is a pretty good gain for this little pup. Let's take a look at the daily chart. You can see an uncorrected impulse leg here. Well, it's corrected on the daily, but let's see if we go to we'll go to the monthly, really long term. The monthly is where the dollar really makes a statement. Let me show you, get rid of some of TradeStation's garbage here. All right, you can see that since this last vertical phase of the rally, which began last May, so we're pretty well into it, There's no corrections the entire rally. I mean, we've gone since last May with no BC pullbacks, and as that has happened, we've seen the dollar get past a little internal there, another slightly larger internal, a major internal there, an internal there that's so major that we'll call it an externalish internal, and now most recently in January, it got past a genuine external. So it's gotten past a zillion prior peaks and still no correction. And that's what's telling us that this is the real deal. This is not just some flash in the pan rally. We should be thinking in terms of a test here of this long-term top back in 2001, 2002, up near 120. So we're at 94.58 right now. Imagine what kind of strength that is, and also factor that into your assumptions about gold, because a strong dollar is not exactly going to be good news for gold. Although I would have to concede, up till now, the dollar or gold has done pretty well holding its own against a very, very strong dollar. Not only that, but gold has held its own against the thing that it hates even more than a strong dollar, and that's a strong stock market. So all things considered, I think you have to like the action in gold here, even though it's been a little bit, it's been in a bit of a wallow. It can't rally quite as far as we should expect it to rally. The rallies are falling short. The last one should have reached 1330, and it only got to 1308. So and last few days, gold has really gotten hit. So the rallies are disappointing, and the sell-offs are really pain. But when we put that in the context of the gold not really getting shellacked in an environment where the dollar and stocks are rallying, you have to. I think that's probably the single strongest reason for optimism concerning gold. That said, I am a deflationist, and I'm always going to be a little bit skeptical about each rally signifying a move to, $2,000 an ounce. I'm just not in that camp.